Hello everyone, welcome back to my channel. This week marks the end of week number 19 in this Road to 200k challenge. And as you may recall, at the last video, at the beginning of this past week, Estée Lauder was hanging around the values of $73 per share, something like that. And on that basis, because the $80 strike call became available, which, as you can see, is consistent with our current average acquisition price, which is right here, $79.88. I decided that it was time for finally start selling some calls, and then I sold 23 contracts based on the number of shares that we currently have, which of course it's 2300 shares, as you can see right here, and also based on the fact that in the previous week the stock basically went on a tear and started rising tremendously over the previous week, and I felt that alright, probably this will this will be quite a little bit of a quieter week before going towards the number we actually are looking for, which is the $80 stock price. However, the stock basically went on another tear this week, and even by Monday evening, at the end of the session, the stock has already risen to $75.98, and then on Tuesday it closed at $77.48, and on Wednesday it finished on $79.29. At this point, the calls that I sold were already super outdated in terms of the premium that I would get, because the premium was so small, and I was in a loss, of course, because the calls earn value by when the stock price goes up, and so because I had sold them first, if I would have to buy them back, I would incur of course in a huge loss because the calls were so much more valuable at this moment. But of course, because the objective was to sell the shares, I stick with it, of course, and I decided to see what's going to happen in the next few days. On Thursday there was a bit of a pullback. The stock finished the day at $78.17. But then yesterday, and as you can see right here, this is the candle for yesterday, the stock ended up rising up to $81 over the course of the trading day, and I was really hoping that it would finish the day above the $80 mark. However, that was not to be, and it finished at the open market session, at 79.32, even though on the post-market trading, it finished a little bit higher on 79.48, which is currently the price at which it stands at the moment. Now that the markets are closed, it's because it's weekend. And even though, of course, for the next week, if we pull up the option chain for next week, the premium is extremely juicy for the $80 for the $80 strike price. However, because I really want to get rid of this stock as soon as possible, I'm not going to sell another call on this. And because, as you can see from what happened yesterday, the stock actually hovered around above $80, which was the price we actually wanted. But the issue is that because we are selling the stock, we are selling the calls, we have no power on the timing to exercise those options. That rests with the option buyer, and so because of that, the stock has to finish above that strike price in order to has to finish the day on the maturity date above that strike price. So this may not happen for another week. It can also happen, we never know. But because we have such a large and concentrated position on this particular stock, what I'm going to do is basically to see how the market opens on Monday. And if the stock rises again, I'm just going to see if the stock goes to basically $80 or even a little bit above, and I just sell the entire position outright. The price of the commission, of course, will be almost irrelevant at this point. I just want to make sure that we get rid of this position as soon as possible, because if we do that, of course, we do not get this premium, as you can see, or something similar to this, but we get our money back, and we can start selling puts on other positions that we may be more interesting, and even though we may receive less premium, these new positions will be far less riskier than this one, because as you can imagine, with a position such as large as this one, every single day I'm getting notifications like your account is up 3 or 4k upon the marketing opening, or it's down 3 or 4k because one small movement of this stock, and it ends up having a huge impact on the performance of the entire portfolio. And so we don't want to be exposed to such risk, because all the other holdings pale in comparison to the value of this particular stock, to the size of this holding. And so we don't want that. That's far too risky, and we don't need to be holding in this position any longer than we have to. So that's the plan for next week. As for Ford Motor Company, the stock ended up going down for the week, as you can see right here. And of course, because of this, we would have also the calls that we want to start selling to get rid of this holding. Of course, if they were not available in the previous week, even less so they will be for this week and the next one. So we will have to wait and see what happens. This is also one of the advantages that we can benefit from if we get rid of this entire Estée Lauder holding, because we can start selling puts on other securities, and we also can start to work towards reducing the average cost of this for holding, so that then we can sell the entire holding once it bounces back. And this is it for 4. In terms of the Pfizer pharmaceutical company, as you can see, it was a bit of a mixed week, but it ended up going down overall in the week. But of course, this is much less of a problem because this is a much more valuable stock. But even so, the current price is 25.75, so it's still $2.75 below our acquisition price, and so we'll have to wait and see what happens with this one. But also, if we see that this situation continues, we can try to sell some puts on it, try to lower the average price by buying the shares at a lower price. But so far this is the situation at the moment, and this is the plan for next week. So let's just move in and place and record this trade in our scoreboard, the trade of this $80 call, which expired worthless, as you can see right here. And so let's just input this on our scoreboard. So the option expired at the same we closed the trade was closed at the same time the option expired, so it took 4 days. Let's just take some decimal places out of here, and of course it expired worthless, as you can see, and so this automatically also lowers the average price of our holdings. But we are not counting to that because we are assuming that this is simply our return, and so this has nothing to do. We are not going to consider this in average price for selling, for the effect for the purpose of selling the stock. And so yeah, we'll have to wait and see what happens. But yeah, so far this is it. Just adjusting here the decimal places for these, but for the time being this is it. And yeah, feel free to leave your comments below, and also feel free to like the video and subscribe to the channel. I'm also available on LinkedIn in case you have any questions or remarks to make regarding this challenge or any other videos that we have available for you guys. And yeah, I'll see you all in the next week.